If you're struggling with your trading in any way, shape or form, this is what you need to do. What's going on, YouTube family? So I do apologize for not uploading recently. Over the past month, I have been back in the UK and I have been visiting family. So I wanted to, take the time off. This is the whole reason I got into trading in the first place, is to be able to have freedom and to be able to do kind of whatever I want, whenever I want, right? So being able to take some time off and spend it with the family while I am there, and obviously seeing friends, is the main reason that we get into it, right? So apologies for the wait, but we are back. Now you will have to excuse my voice because I am a little bit ill still, but I wanted to get a video out this week because I know that you've all been patiently waiting. Just before we get into the video, if you are new here, make sure you hit the subscribe button. And if you are, coming back and you still haven't hit the subscribe button, then make sure to hit that. Show some support for the content that I'm making, and let's jump into the video. So one way to simplify your trading is by understanding one key thing, right? And that one key thing has been spread all over my channel constantly via, every single video. And that is the markets are fractal, right? So if you're trying to simplify your trading, understanding that the markets are fractal, what you can actually do is you can then, look for your entry model exactly the same way as you analyze the higher time frames, okay? So let's take a look into how I would potentially analyze this market right here, and let's just see how we can get into a position. Ultimately what we're going to be doing is just following the prevailing trend. Obviously, as we can clearly see, price is in a downtrend here, right? We are making lower lows and lower highs from each swing point, okay? If you're unsure on how I look at market structure, I do have a video on how I map market structure. So make sure to check that out if you're unsure, right? So looking at fractality of the market, right? What we really want to be doing to keep things very, very simple, we want to be looking for a few key things, right? We want to be looking for liquidations, breaks of structure, and then, how can we get in, right? So in this case scenario here, what we can see is we have two relative equal highs here, okay? So those have been taken out by this move right here, and then we've had this break of structure to the downside, right? So let's just draw that on. Okay, so that's our break of structure, okay? So that leaves us with a relatively nice POI, right, which is also engulfed. So that's one thing that I always really look for is, can we find a POI which has taken liquidity, broken structure, and is engulfed, okay? So that's kind of as simple as that gets, right? So then what we have is we have exactly the same thing, okay? So we have this high. This can be our, daily sweep, if you like. Which is inducement, right? So it's inducement into this POI to, take out anyone that's gone short from here, and then obviously is held for a longer period of time, then obviously they would be, taken out. Obviously, the average person would probably not be holding a trade for 36 days, but, the larger banks can potentially be doing that. So if those people are being taken out, then obviously it could be a sign that we can actually get back into the market and take it short, okay? So if we drop down to the 4-hour time frame, the next thing that we're really looking for is exactly what we've just done on the daily time frame, right? So where can we see a major high being taken out as liquidity, right? So here we have a very nice high which gets taken out. Okay, so that's a liquidity high, which is being purged, which is being, pushed through and then being rejected and kind of pushed further to the downside, right? So the next thing we need to do is we need to find a POI. Now, two of the POIs that I use, extremes and decisionals. Now, if we look at this market right here, we can see that obviously price has tapped into this POI here. It's swept out this high, right, which would be our daily sweep. Now we're looking for the 4-hour sweep, okay? And if we look at the, this price action right here, personally, you could mark off this, but I would say that's a little bit kind of messy. Obviously, same again, it doesn't sweep anything. It's not engulfed. We don't have any of the real criteria that we're looking for in this POI here, but we can mark it out and just be aware, right? Now, decisionals, which as some of you may know, called flips, right? So what a flip is basically just the market flipping direction, right? So that's the kind of simple way that I teach my students, is the fact that, right, price was bullish here and then it came back in, it reacted from this area here and then broke lower, okay? So that is, flipped from bullish to bearish, right? That's the simple definition of how to look at a flip, right? So we can mark that off as a flip, and then we can mark off our 4-hour POI, okay? So that would be our 4-hour POI. Let's just make that bearish, okay? So now that we've done this, what would you anticipate that we need to do next? Personally, for me and my students, we look at the daily, the 4-hour and the 15-minute, right? So the next thing we would go down, the next time frame we would go down to is the 15-minute time frame, right? So looking inside of this 4-hour POI, let's just kind of ignore that this has kind of come back up into it already. What are we looking for? So we should be looking for a sweep, okay? So there's a sweep, right? If we look at all of this price action here, I'm just kind of jumping to the point, but if we look at all of this price action here, we have no sweeps in this area. We do have one here, right? But as we can see, price pushes down, doesn't break anything, comes back up into here and then pushes down again. And then we have a sweep and then we start pushing down and we start breaking levels, right? So this is obviously an internal level. This is more of a swing point, right? So this level here has then been swept, okay? Now what we can see here is we have a engulfed candle, right? We can pull that out as our 15-minute POI. Now, what also do we need? We obviously need a break of structure. So we can have this level here being our break of structure. Okay, so that's a boss. And now what do we have into here, right? We have relative equal highs, or, kind of slanted highs, right? Which can be our inducement, okay? So next thing we do, we've pretty much done everything that we can do on the 15-minute. Remember, the market is fractal, so we are doing exactly the same thing on every single time frame, okay? So what do we do now? We go down to the 1-minute time frame, and this is basically how you're going to build your higher time frame narrative and move it all the way down to these lower time frame positions, and then be able to get a very small, tight stop loss and be able to, potentially swing trade. What I like to call it is intraday swing trading, right? Because what you're doing is you're trading in the intraday, but then you're looking for your higher time frame targets. Where can you target on the higher time frames, right? So we've now got our 15-minute POI. What you can obviously do is you can drop down through time frames. Obviously that was just a wick, which we marked off just here. Well, it was the engulfed candle here, right? You can get a bit more of a specific POI. Now on the 9-minute, we have a very nice engulfed candle, which sweeps that high, then breaks the low, right? So, and we also have the inducement, which, basically the same as the 15-minute. So if we then get down to the 1-minute time frame, right? Price comes into this 15-minute POI, which is right here, okay? And then what do we get? So make sure that you're aware of this, right? This blue line down here is New York session, right? This is just the indicator that I use to indicate to me that we are in session, okay? So what do we get? We get this high taken out, okay? Then we get this low taken out, okay? So what do we need, right? We need a sweep, okay? So there's our sweep, and then we need a break of a structural level, okay? So, boss, yeah? Now, inside of here, we don't really have anything too simple, right? Like there's no accurate POI in which I would say, yeah, that's exactly it, right? This one we have here, which is not quite engulfed, right? It doesn't take any liquidity. Here we have, a high being taken out, and then, it could potentially be this whole one here, right? So you can mark out either of those, right? Now in this case scenario, let's just change that to a bearish refined. This POI is the one they react from, right? But we don't really want to be risk entering from that. We want to be waiting for extra confirmation, okay? So what can we do? Well, we can do exactly the same as we've just done on every other time frame and on the 1-minute time frame. We can do it again, right? So what we're looking for is a sweep, okay? And then we're looking for a break of structure, which would be either of these lows, right? That low gets taken out there. Break of structure, right? And then all we're looking for is the inducement into the POI, okay? So there's our POI. Let's just make sure we're including the high, okay? and that is then your position, right? So this is then going to get you into the trade on the 1 minute time frame. Risk is rough. I would go about 4 pips on this, right? Because you always want to be adding spread on top of the high of the, onto any sells. You always want to be adding spread on top of your stop loss. And then if you're buying, obviously you want to be adding your spread onto your entry, just to make sure that you're getting into the position, right? So lo and behold, obviously we're in the position, prices then starts to move down very rapidly, comes back up to, mitigate a POI, right? But then ultimately what can we do, right? We need to get onto the higher time frames, because remember what we're doing here, right? We are looking at the 4-hour time frame or the daily time frame to be able to find our targets, because what are we doing? We're trading from a higher time frame POI, and then we're looking to target down at a higher time frame location in which we can actually take our profits in a very logical place. And obviously all the way down, we are going to be taking partials the whole way down. It doesn't just mean you're going to hold this for, until it reaches your final target without taking any partials, because that's just illogical. So on the daily time frame, we can't really see too much going on here. What we do have is we have this low gets taken out, right? That's a sweep here. We don't have anything there. We can drop down to the 4-hour time frame. Let's check this out, right? So we do have this level gets taken out here. Okay, that's another sweep. Okay, and then we also have another one right here. Okay, so same again. This is the most recent sweep. Okay, now what we want to be doing is we want to be finding an engulfed candle. So can we find an engulfed candle? We need to drop down time frame, right? So here, first one, right? So we have a sweep. Now we're looking for an engulfed candle, right? So this would be our first engulfed candle, which has swept something. Same again. Look at this price action here, right? This price action has not swept anything. This price action hasn't swept anything, right? So this will be used as inducement into this level right here, okay? So that can be our final target, right? If we pull this all the way down to here, we're looking at roughly a 54.5 risk to reward, right? So same again, we get down onto the 15M time frame. What we can do is we can start marking off partials, right? So what I would do is I would make this my first partials. I don't have oh yeah, I do. There we go, partials. And then I would go this level right here, which would be another partials. And then this one here. And then my final take profit would be all the way down at the bottom, right? So what you're doing is you're not allowing price to come too far back up without taking anything, right? When price takes these levels out, you will most likely see that price will come down, it will take this level out, and then it will have a retracement, and then it will come down, take this one out, have a retracement, come down, take this one out, have a retracement, come down, and then obviously do whatever it wants to do, right? So that's something that you need to be aware of. Okay, so if we jump onto the 4-hour time frame, we're now in that position, right? We can let it play out. Let me just go to 15 so I can show you nothing happens, we don't get stopped out, right? We have to wait. This is obviously an over the weekend trade, right? This was Friday, the 28th of October, and then we're kind of holding this through the weekend. There we go, right? What do we say? We take out this low, we have a pullback, right? So if you're taking partials below this low, then this pullback happens. You're not really too worried about this, right? Because you've already taken partials, you've already taken some money off the table. Let's jump onto the hourly time frame, and then we'll just let this continue, and we can watch exactly the same thing happen right here, right? We're having this pullback, okay? Potentially, so the main places we're going to have pullbacks are taking out a level of liquidity or tapping into a POI, right? So let's just go onto the 2-hour here. Let's go a little bit higher. All I'm doing again is looking for a 4-hour, an engulfed candle, right? So same again here. Here we have an engulfed candle, right? That's why we're getting this pullback or this, retracement, okay? That's bullish. This one's bullish also. There we go. Okay, so that's why we're getting that pullback there, right? And then we just continue to wait and we just keep holding our position. Boom, there we go, right? So we take out that low, okay? We did have the, I believe this was FOMC on Wednesday. So we did get a poke above this level here, which obviously swept out anyone that was, putting their stop loss too tight. I would always recommend to keep your stop loss at, break even at least, or even if you've taken partials, then you can leave it at the original stop loss spot, and you'll be relatively safe in that way, right? So same again here, we took out this level, we didn't actually have a pullback, we came straight into the POI and we hit the final target, right? So that would be 54R, obviously taking 3 partials at very logical levels. Potentially at this point, if you're not using Trade Assistant, then you're going to be not taking it because it did just drop relatively fast straight in there. So it's completely down to you how you want to manage that. But I would say taking partials at that level is a very logical place to take partials. So as you can see, these kind of setups do take a long period of time to actually set up, right? They're going to take a while. You're going to be sitting on your hands and waiting, but these are the highest probability setups that you're ever going to find. Why? Because you're following the overall direction of the market. You're getting into a position from a very logical level, from a higher time frame POI, and then you're scaling down and you're doing exactly the same thing. And all you're really using is the understanding of a fractal market. Once again, one of the main things that we're looking to do as traders is to get our time back, right? To be able to be financially free, to be able to do whatever we want, right? And to be able to not spend too much time on the charts. And this can be exactly how simple trading can be, right? You can be patient, you can be waiting for the market to do exactly what you want to see, right? Being fractal, doing the same thing over and over again, and be able to take these really high probability setups with very little risk. The smart money realm has been absolutely saturated with, lower time frame entries and this and that, right? No higher time frame narrative is ever being built anymore. If you want to be more consistent with your trading by taking fewer trades with higher risk to reward, then this is exactly what you need to do. I hope you've enjoyed the video, people. If you have, make sure to hit the like button. Let me know in the comment section below if I've helped you. Take care, and I'll catch you on the next one.